Hello, everyone. Welcome to The Edge, where legends share their original playbook. Today's guest has experience with full entrepreneurial journey from the kitchen floor to successful exit. He started washing dishes in busy Italian restaurant, worked his way up as head chef, then into management, and eventually becoming the general manager and the area manager. Along the way, he discovered the passion of high pressure environment, teamwork, and put his civil engineering career on hold. That drive led him into a startup life, uncomfortable territories that paid him afterwards. After building Frieza to 17 sites and 250 employees, the business was acquired by Pizza Express in 2016, following a tough 6 month sales process. Since then, he continued building and backing businesses, co founding an international pizza chain, launching food brands, investing as an angel, and helping F&B founders scale and exit through his venture studio, a trusted voice on LinkedIn for food and beverage leaders. He built, scaled, and exited multiple times. Please welcome Edin Basic.
Thank you very much, Arvi, for inviting me.
Would you like to share your story in little details, how you got started and how many times did you fail before your successful exit?
Well, my story is a bit unusual, actually. So I didn't fail before having successful exit. I don't know. It just happened like this, I suppose. I always had this drive, some call it entrepreneurial mind, which, I see the opportunity in most things. I think everything can be done differently, better, and so on. So when I worked as washing the dishes, became head chef, and worked in all different positions in the food and beverage, from manager, area manager, operations manager, until I was ready to start my own, to go on my own. And that was, just from one day to another, I left really well paid job. I think I was in Starbucks at the time. It was my beginning of my entrepreneurial journey into unknown. I had a co-founder and we found a gap in the market at the time, which, with our limited knowledge and experience of starting our own businesses, we just went for it with the friends and family and some of our own funding. We started. To cut the long story short, 15 years later, we had 250 employees and we exited to Pizza Express, which is a market leader in the UK.
That's so powerful with 250 people. How you were managing? Were you the CEO of the company or you were heading sales?
Well, it was two of us, two co-founders. So my co-founder, he was running the operations and I was more into compliance and marketing and sales building. So we strictly divided jobs, which was challenging, because we were both passionate about the same thing, but it worked. And then after the second site, we had VC came on board, investment, and we started as a proper business. We had the board, we had the chairman, and regular board meetings, monthly board meetings, writing board reports, doing all the numbers, projections, and KPIs, and so on. And it was really transition from kind of projects run by passion and drive into something more structured, which was really a great learning process from us.
That's gold because when the founder starts, it is their own way of working. But when you get the board or chairman, the dynamics changes, isn't it?
Yeah, definitely. We experienced this very much so.
So, what do you suggest to the founders listening to this podcast? Should they stick to their own way or they should get a fresh perspective if they want to scale?
Well, that really depends on what stage of a journey you are. I think every business starts from the passion and desire, to change something, to do something differently, to improve customer experience, to make the world better. There are many different driving forces why you start your business. And this is when your passion is taking you through all the ups and downs of, starting, getting proof of concept, and that's normal and that's okay. You manage people. If you have employees, you will manage them by personality, getting the same drive. But I think when you get to the stage where you need to grow, then you need to learn how to accept that not everything has to be 100%. I had experience. I was actually writing today about this. I was one of those 100% of not or nothing, kind of perfectionist. I was always there, always in the front, always available. I checked everything, and it's not sustainable. One day I woke up and I couldn't stand up from my bed. I completely burned out. My legs gave up and my body refused to stand up. It's really scary feeling. If you never burned out, you wouldn't understand. So it is something. There and then I decided, well, to get out of this, I would need to be able to accept 85%. Not everything has to be 100%. That means that my KPI changed from perfection, 100%, to making fewer repeated mistakes by my team. Letting them to do mistakes and learning by mistakes, and putting processes in place that those mistakes don't happen again. And slowly from 85%, we're climbing up, we're never going to be 100%, especially in the multi-site operation. And that was great. I think that was that moment, that decision is probably the best decision in my journey. That's when everything started to grow. And
Really?
yeah, exactly. If anybody tells you 100% of nothing, just ignore. This is not right. Mm.
That's good to know because I feel that if you compromise, then the quality goes down and you don't get the results which you expect. Is that not the case?
Yes, that's not the case, because when you say quality goes down, there is an acceptable level how much that goes down. Because, if it goes down, you have a complaints and, customer experience is not good, then obviously you're not doing it right. But there is an acceptable level of going down,
Sure.
because it's still good. It's still better, because we founders in our own mind, if you are a perfectionist, your standards are really, really high, which is good. Your customers don't necessarily have the same standard. For them, 90% is already amazing.
That is gold.
Mm.
So, if you can give one piece of advice to someone building a business right now, what it will be to stay relevant for next 5 years?
I started my operational businesses. I was involved with a lot of different, projects in this country and abroad, and so on. So I decided to start a consultancy company called Amplify. So what we have quite lots of clients we work with, in different stages of their journey. We have a company with 500,000 turnover a week, to startups, somebody just starting and getting proof of concept. So when you are starting, I think that what is really important is to, product market fit. You have a right product for the right market. So that's the first thing. And the second thing, I always start with our startups. We start with the end results. So where do you want to be in 5 years' time? And that starts in numbers. So we'll do financial model for 5 years to see, okay, I want to be whatever the goal is. And we start from that goal and work backwards. And this is really good way, because you would really understand, first of all, you would know what your goal is in 5 years, because it's not just passion driven. That's when your kind of brain and your experience, if you have advisors, comes in to clarify the journey to your destination. And along the way, when you do your numbers, and I'm a big fan of numbers and spreadsheets, and I think that's really important, is that you will understand all your stepping stones or your framework, where you need to go, what funding you need, the cash flow, if you need fundraising, when do you need fundraising. It just gives you a better roadmap to your final destination. The starting numbers, and know where you're heading. Because if you don't know where you're heading, any road will get you there, which is a big warning.
Sure, that is so powerful that you keep an end goal, 5 years plan, and then you work backwards and create a plan. So, is it relevant for the changing dynamics which we are facing right now? Economic is changing, things are changing very quickly. So, do you think that even if we have 5 years plan, we have to have um
Pivots.
smaller goals and benchmarks which we want to achieve first so that we can see more clearly for next 6 months or 1 year?
Well, look, nothing ever works according to plan. So, and yet we always do planning and so on. So, but that's okay. I think if you know where you're heading and you have a plan, you work towards your plan, then there's many things can happen, as you mentioned. Market can change. Circumstances. Pandemic, and that's the time when you pivot. That's where you need to be flexible to change and adapt, and that will always happen. But at least what you have a base of your plan, which you're working towards, which you then tweak and change and and adapt and so on. There's many examples of this. We can start with Amazon, the obvious one. He started selling the books, and
Hmm.
now they are one of the biggest companies in the world. That's fine. That's completely okay. You cannot predict everything.
Sure.
What is important there? I just want to add one more thing. Like when it comes to exit, my example, I just want to give short experience here. So we had, I think, 15 sites at the time, and we just restructured. We had a VC, we bought them out, we introduced angel investors, group of angel investors, and we wanted to double the size of the company before exiting. That means we wanted to go to 30 to 35 sites. Now, to be able to get where we wanted to go, we needed to put more kind of resources in central support. So we had the operations manager, the most expensive person we ever employed. We invested lots of money into head office and central support, and then market changed. You had completely everything changed. We had lots of offers from different trade, and people wanted to buy us. Everybody wanted to go into the same space where we were. And then we had certainty, but our numbers, they were not the strongest at the time because our EBITDA was lower. We invested the profit into growth rather than maximizing the profit for exit. So we were caught up, and anyway, we proceeded with exit, and we were happy with the numbers and return and everything else. But those things happen, and when these kind of things happen, then it's very important to create optionality, to create more than one choice, because there is always more than one choice. You don't have to do anything. You can sit on it, you can slow down, you can speed up, there's many different options strategically what to do. Yeah, that was our experience. And, thinking back now, maybe we should have stayed and ride the change and keep quiet for a couple of years and then push for exit. But that was a very difficult decision to make. When you have a certainty and a certainty of exit, and you have uncertainty of the market has changed, uh, it's very
Is it?
difficult to.
It
Every
is
person
difficult.
will change, probably make a different decision, I suppose.
Sure, it is very difficult choice to select certainty over uncertainty.
Mm.
Your LinkedIn says you are a stubborn fighter. What fights you were trying to win?
Wow, I think what fights to win is always to be the best. I think every entrepreneur is a very competitive person.
Hmm.
If you are entrepreneur, then being competitive is a part of your nature, your personality.
Yes,
And what fights I wanted to win is never give up and be the best in what we are doing. You have to be as big as possible. Being entrepreneur is not, and a founder is not. People think it's an easy, kind of attractive life, but there's so much going through this. It requires lots of sacrificing, lots of determinations. One day you have a business, another day you don't have a business. To be able to accept these ups and downs is quite challenging psychologically for a lot of people. Why would you do this if you can have a salary, work for the company, and be, kind of secure every month? You have a salary at the same day, it arrives. Being, founder, for months you don't have a salary. You need to be able to,
absolutely. Yeah,
to accept that.
yeah, that is so true. So, Edin, from head chef to general manager, was it a moment where you had no idea what you were stepping into?
Yeah, I think it's part of everyday journey. It's learning something new. It doesn't matter how much experience you have, doesn't matter who you are. If you stop learning, you are going backwards. So there's always something new to discover. And that's why I think being a founder and going on this journey in your own is really exciting time, because there is many, many things you don't know. However, if I can change something looking back now where I am, it took us 15 years to build from idea to exit. If I can change something, I would genuinely accept, I will find somebody, a mentor or advisor, somebody who has done the same journey I'm trying to do. Because learning by mistakes is not smart. I mean, we all do, but on the end of the day, if I had a mentor or somebody to help me on my journey, I'm convinced now that it would probably take me half of the time and double my return.
That's so powerful. And honestly, that is what it is. If you have a mentor, they'll show you the path and they'll also help you to not get into huge troubles, not make expensive mistakes, and save a lot of time. So I am a big believer of having a mentor in life so that you can look up to someone, and even if they are just going to say that everything will be all right, that is what you want to hear from someone who has done it, just to hang on to that moment. So I totally agree with you.
Sometimes I think that making mistakes and learning by mistake is powerful, as long as you don't repeat the same mistakes. But some mistakes, I have examples, many examples, can be irreversible. So if you make some mistakes early in your journey, then later on, you can't go back and change that, and that can be really, really costly.
Mhm. Can you give one example of such thing?
Yeah. Okay. So both myself and my co-founder, we come from the restaurant background, like a full service restaurant, people, table service and so on. And our concept we started was mostly based on delivery. Okay.
Takeaway.
So yeah, delivery and takeoff. So we slowly, we found different sites. Some sites were bigger than others, and then we started to have more seats, and over the time, we turned it into some kind of hybrid of our original idea of the customer journey into kind of full table service, but it didn't work because the food was coming from the peak time was the same for eating in and delivery. So we struggled operationally, and we just blindly went into it. So we had about, I can't remember now, maybe 6 sites, and two of them or three of them actually had the heavy eating in, part, until somebody came and said, somebody, industry veteran who wanted to look into our business and so on. And, we asked him, so what would you change? What would you do with this eating in and, delivery? I just said, we kill eating in. This is not what you are. Just stop it. But how can we do this? No, just do it. And it was the best advice we ever had, because if we didn't change that, if you open, two or three or four more sites with the same customer journey, we would never exit. We would never be able to grow.
Hmm.
So I mean, that's just one example. There are many examples. But we couldn't see it. We were too close to the operations and to running day by day. We just couldn't see this issue until somebody came and for him it was very clear. He said, why are you doing this?
Sure. And it is a very tough decision because to close down three sites is like,
But we didn't close the sites. We stopped that. We reduced eating in. So we made the
okay.
customer journey to be the same, delivery, takeaway,
Mhm.
and kind of QSR coming in and out rather than staying there, booking table, having proper table service, because this is not why we started in the first place.
Sure, sure. Okay. Site number 3 or 4 for Frieza. Give me the worst day and what was very difficult.
But especially at the beginning, when the first site we opened was really, really busy. We had lucky, we were riding high. Yes, we made it. Then the second site we wanted to open, and we found the site. It was perfect. We negotiated, we signed, we exchanged. Yeah, we exchanged, but we didn't have money. Well, we just didn't, because we thought we did, but we didn't. And we found ourselves with this person or the landlord we exchange with said, well, you have to complete now because if you exchange, if you don't complete, I'll take over your company. So we were, yeah, I mean, it's very funny and stupid at the same time. Just tells you how inexperienced we were. And then one of the customers, similar customers, first sight, he was a music producer guy. We were telling him this, and he said, okay, I'll lend you the money and so you can complete. So he lent us money, which we gave back, over the time, and he reinvested. He became part of the board. He's still a very good friend of mine. But those kind of things happen. One day you have a business, the next day you don't have a business, then you have a business again, then you grow. It's just crazy. So that was a tough time. That was a time where we thought, okay, well, this is all for nothing. We're just so silly to make this stupid mistake. But somehow we managed to, yeah, to carry on.
Okay, that is something one should not try, because right now the appetite of how much stress one can take has reduced. So I think if such situation comes across, a person will break down. They'll not even think of what I should do. They'll just close down things. That is what is my opinion.
Yeah, well, that's it, isn't it? It's really because we were so determined, and I strongly believe that one of the biggest qualities for the first time founders is the resilience, the
Resilience.
determination and resilience. However, saying this, I think, over the time I learned another lesson that sometimes you just need to give it up, because if you are trying to make something work, which doesn't work, it's either product market fit or market change or whatever, then it needs to switch from resilience to damage control. That means, if you don't pivot or change or stop, then you potentially can lose so much money.
That is the stop loss in
Mm,
shares, isn't it?
yeah.
Sure, sure. But it is very difficult to give in what you have created, and most of the founders are emotionally connected to the business. So I think to look at objectively is difficult, but it is needed. Do you agree?
Yes, especially in the pandemic time, everything changed, and so many businesses they just it wasn't suitable to run anymore. But
Hmm.
it takes really get over your ego to understand that and to move on, to say yes, that was great, and just kind of and move on. But it doesn't have to be that radical. For example, if you are having a multi-site operation like a chain of restaurants or whatever, some sites are not going to work, and it's okay to move on, to close the site and move on. That's completely okay. Instead, being emotionally attached and stubbornly, I'm gonna try, it's gonna work. His location is wrong. There's no your type of customers that don't live there, and you have to be able to accept that.
Sure. So is it good for a founder who's listening to have investment in the early years to uh, get off the pressure when they want to scale?
So everything is your own cash. So when you have investments or you invest your own money, it's still your own cash because you have to give away things. Um, and that question you can answer in two different ways. It really depends on the founder. Came across founders who are very much protective of their things. They would rather have a big part of something smaller than the smaller part of something big. So we were decided on the very beginning. I would rather have a smaller part of something big than the big part of something small. And that's when we got our VC after site number two. It really depends. I think, personality, and I met a lot of people who are one way or the other. I'm a believer in if you are creating something, if you want to create a company or a brand, then it's very unlikely that that brand is sustainable if you are creating lifestyle business, okay? Because it's very few lifestyle businesses who can survive nowadays, especially. I always, I'm a great believer in growing fast and exiting in 5 to 7 years, let's say. And by doing this is having your investment and having people on board who can help you to grow, having strategic investors rather than any investors. So by this I mean people who can actually help you to grow, have a connections or distribution or, the expertise, because taking a company from 1 million to 10 million turnover is not a small task. Requires lots of knowledge and skill and and investment as well.
Yeah, that is true. So, Edin, how much money did you lose before it worked?
I think none really. I was lucky enough, or I don't think I wasn't clever. It was just maybe luck, but we do create our own luck. So my first project worked. One of my projects didn't work, which was in pandemic, where I invested in a bar in East London, and it started amazingly. We opened in March 2020, sorry, in February 2020, and then in March was lockdowns. And since then it was a struggle, but that's fine. That's okay. You always have ups and downs. So before I made it work, before I had a successful exit, I actually didn't lose any money.
Okay, that's good to know. Pizza Express exit. How was it? How much time did it take? And how was it for you emotionally?
That's a really good question. So for us, when you have a big company like Pizza Express buying small company like Firezza, like us, I didn't understand at the time. It's very lengthy process. So people were telling us, "Oh, it's going to be the most stressful time of your life. No deal is ever the same. It's going to be to test you to the core." And I was thinking, what is there to go wrong? We have everything is transparent. We are a successful company. We have numbers, all the data room files. It's going to be very quick and easy. How wrong I was. 6 months due diligence. Okay, 6 months, which means anything can go wrong within 6 months. So you have to run the company. So you give them the numbers which you are going to hit, and obviously the offer and everything depends on it. And then due diligence goes along at the same time. Or everything from HR, property, numbers, HMRC, people. And it was the most stressful time of our life because you have two double full-time job or even more, because if your performance drops 1 week, they will drop the price, and then you walk out, and then they come back, then they walk out. It was really like this. And also the due diligence from big companies is really important, because maybe quite lots of your listeners, they don't know this, that the fine of let's say compliance, food and hygiene or property or whatever, is often is linked to turnover of the company. So if we have food poisoning allegations, let's say, and we have a problem, we go to court and we lose, the fine will be based on our turnover. But if another company like Pizza Express doing the same, for the same offense, they will have, 100 times more, fine will be 100 times bigger or more, because it's based on their turnover, and they had 450 sites at the time. So and that's why they have lots of lawyers and accountants to make sure that they're fully protected against this once the sales go through. And this is putting a lot of pressure on the smaller operators, because you have to be able to handle the due diligence. You had one lawyer and one accountant. They had, I don't know, 20 lawyers and 20 accountants and checking everything. So it's a quite um, lengthy and thorough process to go through. Now, in order to, if you are a smaller operator selling and you have a potential buyer, we work within my consultancy company, we work on exit readiness. So if you are exit ready, then your interest is to shorten the due diligence as much as possible. Short due diligence is more likely you will complete, because long due diligence is very likely you're never going to get over the line.
Okay,
I
so
found out that 75% of deals
Mhm.
fall through because after the price is agreed, that means they fall throughout the due diligence. So in your interest, if you are selling, if you are going through the sales process or thinking of selling or have an offer, you're much earlier than actually planning to exit. You need to start your exit readiness.
Okay, that is something every founder should keep in mind if they want to exit ready. So, what system should they use, and top three things they should keep in mind if they want to be exit ready?
Well, the first is to make your operation scalable. So make it simple, have your documented, manuals, how to scale up. That's the first thing. The second is the market potential. So you need to show with the real data, real companies, used company to help us identify our ideal customer, who our customers are, and then map up the whole London and UK to see potential of the size, how many sites we can open. This data is very helpful for potential buyer because they can understand, okay, if I grow this from, we have 17 sites when we exit, from 17 to 100 sites, my return will be X. Okay, so that's really important. And number three is to pull yourself out. So basically, not to make sure that not everything goes through you. So you have a proper management system in place. So a company can run well without you because no buyer is not buying you, buyer is buying a business. So if everything depends on you, that can be a big obstacle.
So the listener should write this down, these 3 points which are very important.
Simple, make it scalable. The second one is the market's potential. They have a real data showing market potential, not something you have a feeling for. There's a company called CACI or CACI, CACI. That's what they do. They're specialized in exactly this, location mapping and market research and so on. And the third one is to not to make yourself indispensable, to make yourself the business can run without you. Or have a management structure in place, have, potential for you to be easily replaced.
Sure. What's the biggest amount of money you have ever lost in a single decision?
I think the biggest money in a single decision was post exit, another project of mine with this bar I told you about, where I tried to keep it going for too long. I didn't walk away. I didn't understand because after pandemic, it was just, things changed. So, but I think my emotional attachment, because I had the different projects in mind. Okay. So I wanted to, to challenge the British pubs experience. So I wanted to create four sites in London and then exit to one of the big breweries and so on, and to show how the pub should be. So I had a plan with live music and so on. And first site we opened in West London was amazing. We doubled the sales. It was super successful. Second site in Hackney, it was just before pandemic. And then I didn't give it up. I just kept pushing, kept investing. And that was a mistake.
So, at what point a founder should think about and withdraw themselves from the business? Is there a point where they should say that, okay, this is not working?
It's all about numbers. I think the biggest clarity I found in business and strategy and, to answer questions like this is to be on top of your numbers. So, work out your projections, your kind of forecast, sales, different channels where the sales are coming from. And if you are missing your targets and if you are not breaking even, your sales are not coming through with trying different things, then you need to understand it's never going to work. But it's important to have a clarity to understand how much is not working. It means it's like if your target is 10,000 and you are on 5,000 and you are repeatedly getting between 5 and 7, but you still 10,000 is where you want it to be, then you need to be able to pull out and say, this is not going to work. So that clarity to understand where you want it to be can only come from numbers.
That is true. Numbers is something which we have to keep very close eye on, and even I feel the changing dynamics is one of the factors. So we need to keep looking at what's happening around, because if big companies are shutting down, maybe it is time that you start thinking about.
Yeah, the market has changed. Like now, for example, in food and beverage, if you look at the casual dining, which is your I don't know, I don't want to say the names of the brands, but casual dining is struggling. You have restaurants, table service, they're closing all over the place, pubs. What QSR, quick service restaurants, the fast food type of places and coffee shops they're having double digit growth. So understanding market is important. Can you actually turn if you have a small service restaurant, can you turn it into QSR that potentially, but trying the same thing over and over and expecting different results is just not going to happen. So those kind of decisions are really major. And that's where your founder or CEO needs to be able to read the market and to understand what would take in order to to break through, to wherever they are stuck. And sometimes it's very different for every business, and it's very hard decisions to make.
So, Edin, this is an interesting one. 250 employees and 17 sites. How many nights did you actually slept peacefully?
Well, it was, at the time when I was doing this, it was kind of culture of work hard, play hard. So I used to stay out, partying and drinking, and, because this kind of industry is always like this. Now I stopped drinking 3 years ago, and my life has completely changed. But at the time, looking back, it was just like a blur, You just work 24/7. You are out all the time. In terms of sleepless nights, think that what kept me awake at night was not really the business numbers and operation. It was something completely different, and it was compliance thing, like a fire regulations. Okay, so we had the wood fire ovens in the places where we had like a 2 or 3 floors things above, and you're dealing with a real fire. If fire starts, then you have a flats above. People can die, and as you know, as when you start, you look your money where to invest, and very often compliance is very little left for the compliance. So every time I see the fire brigade, my heart goes like this. Even now, I don't run any more businesses because this is the thing. You as a founder, you always think about what is the most important. Your cash is limited, where to invest, and so on. And as I said, compliance is something which is often left out. But now, if I can go back, I would definitely not do this. I'll make sure there is no gaps in the compliance when it comes to fire regulations, food and hygiene, health safety, and these kind of things. It's so important because that can destroy. Did you see the recently in France in Alps they had this fire? I
Yes.
was reading this. I was shocked. It was like unbelievable. They broke every single rule, and these founders, the operators of the place. I don't know what is the bar or restaurant, whatever. They're gonna go to prison.
Really?
Yeah, yeah, of course. They're arrested now. The full investigation is, I don't know how many people died. It's 200 people. No, I can't remember now. 50 or young people died because the fire exit was not regulated properly. It was small. They didn't have permission to have that many people on site. All of these things. Anyway, this is, may sound like a boring thing, the compliance, but it's so important.
Sure. I never realized that you can go to prison for this.
Well, the responsible person is going to be investigated. We had the fires in our sites, and every time we had a small fire, whatever reasons, there is a fire brigade, a full investigation. They're asking who is the responsible person. They look at the processes, procedures, your fire checks, fire exit, maintenance, and all of these kind of things. And if you have any gaps, then you can be fined, you can be disqualified, or you can go to prison if there is a damage to property or threat to life. Yeah. It's a serious thing.
It is boring but very important thing for a restaurant business. I think for every business to ensure that there is no threat and proper insurance and everything should be there with the compliance checks.
Yeah. And this is the time the most of the due diligence was spent on this, on compliance. So if you are planning to exit, compliance is going to like a property, food and hygiene, health and safety, even HR, it's type of compliance, how you treat people. There's not, this is where you are exposed. And if you have a good processes and procedures in place and you have no incidents, or if you had incidents which you dealt with properly, can shorten your due diligence massively.
Okay, sure. So, Edin, what is one system every founder ignores when they get started, but they struggle for the same thing when they want to exit?
Well, compliance.
Compliance. Okay, we just.
This is it. Yeah. It's always at the beginning is never on the top of your agenda. It's
Mhm.
always kind of, yeah, we know we need to do this. We can patch it up somehow. Yeah, we will do it. But
Mhm.
as you grow, that problem just becomes bigger.
How do founders stay relevant when AI is changing everything? So, for F&B business, is anything changing?
I think AI is changing every business. I think there are huge benefits of using and incorporating AI, for example, in the back office, in the technology especially. And we can see lots of great, improvements and changes. But the one thing AI doesn't have, it doesn't have experience. So you, if you are thinking about strategy or growth strategy or exit and so on, because AI is there to please you. If you put any prompt into, one of the AIs, very often they will give you kind of, they praise you, they give you positive things, you're great, you're doing whatever. So I think when AI fails is finding the real strategic advice on your growth strategy and exit readiness and exit itself.
Sure. So the founders who are listening, if they want to exit, how do they reach out to the buyers?
Well, there's things which is called sale process.
Mm-hmm.
So once you decide to go into sales process, that's what you take advisors on, and they will make information memorandum, which is your business case. It's your like a
Mm-hmm.
deck
Mm-hmm.
where it has everything about the business, projections, potential, operations, key people, and so on, actuals against forecast, and then they'll go to market. So this is like a typical way, and they will present this to their contacts, and then you will have a meetings, and they will give you the offer. You sign head of terms, and then you go through your due diligence. Now that's the process, but nothing. Of course, we had sales process which we didn't sell. So the way we sold is when this market changed and people approached us. One of the guys on our board who was leading angel investors, he was actually single-handedly, he managed the sales process, and we didn't have a corporate finance company to do this for us. We did it ourselves. Okay. So now what
Okay.
I do in Amplify, so we have a group of people we know who, accountants and industry veteran from the city. We have a lawyer. So we run the sales process ourselves,
Mm-hmm.
which is I would say less structured, but it's less bureaucratic than having full on corporate finance companies. So we know people in the industry who potentially could be interested. We know, the founders and CEOs and so on. So there's no straight answer. The typical way will be to hire corporate finance company specialists to run the sales process for you, and
Sure.
that's a good start.
So I'll like to give you a scenario where a restaurant or a takeaway is not doing that well, but it is in a good location and it has potential. So is it opportunity for an investor, and will it be a good buy for them? And if a founder wants to reach out to them, how do they do, and what are the points they should focus on?
Well, you're talking, this case you just said is not investable because you can't raise funding for something which is not working. So that particular case, if you have a good location, restaurant who is not working, they need a turnaround. So it's not investment case, it's a turnaround.
Okay.
So we had clients come to us and say, we need a fundraise, we want to grow. And when we go through our due diligence, which is quite thorough before we sign anybody in, it showed that they actually need a turnaround because they're not making money. And if you think investment, why would investor invest in a company which is losing money essentially? It just doesn't make sense.
But is this not a opportunity for someone to buy a underperforming company, add their expertise, and then sell it for double the valuation or triple the valuation?
Well, if they buy the company, so they're buying the assets and they're turning, it still requires turnaround.
Okay.
So the turnaround, if something is not working, you need a turnaround. You need to make it work. Now, there's a difference between buying underperforming company and doing your own turnaround and making it work and selling, as opposed to investing. Let's say you need £100,000 investment. You will give 20% of your company, but your company is not worth anything if it's losing money. How can you justify the valuation? So that when you come to nitty gritty, the investment I think is treated differently from buying other performing company and turning it around and selling it.
Sure. How to increase valuation to have a better exit for companies?
I think that the valuation is misunderstood on the exit. I think sometimes, typically your valuation on exit will be based on multiple times EBITDA. Uh, and from the buyer point of view, what they are buying, whether they invest, 5, 10, 20 million, what they are investing in, they are investing in return. So, if you have a bigger buyer, for them, the value of their money is less than what is for you because you are the smaller guy.
Hmm.
But if you can prove that your concept is scalable and by opening that many sites and showing the potential in the market, that this is what is going to increase your valuation. Okay. If you're also the return on investment. So let's say if it's multi-site operation, if you have to invest £1 million to open a site, which will produce, I don't know, 200,000 EBITDA a year, or you invest 150,000, you produce 100,000 EBITDA a year, then it's the second case is much more compelling because your risk is less for opening new sites or getting it wrong. So that also play a big part. But if I have to one point answer, that would be showing the potential of the market and scalability of an easy scalable model where you can, in 3 years' time, you can increase from 10 million to 100 million and showing that this is possible.
Sure.
So that buyer is going to pay more for this potential because for them it's irrelevant because they need to believe in the potential that they can grow from X to Y in whatever number of years.
Do you have a sales system or a marketing system attached to the business so that you can increase the valuation? So, how you are going to acquire new clients? So, whole outreach thing, reaching out to the locals and marketing initiatives, all those things will be a package if you want
Yeah.
to increase a valuation.
Yeah, I think all of these things will be packaged. Like, for example, if let's say I'm talking about my case of there's many different businesses, but let's say a multi-site operation. If it takes you to break even from opening 3 months, 6 months, or 9 months, this makes huge difference in your cash flow because you have to fund those businesses for 3 months or 6 months. Or obviously, it's better 3 months than 9 months. So and that's where your pre-opening marketing kicks in. So if you can if you prove that your last, I don't know, 5, 6, 10 sites, they broke even after 3 months, then you have a strong case for the potential buyer to say, look, we have a system in place. There's no reason why this wouldn't happen for the next, I don't know, whatever, how many sites. And that makes huge difference in valuation because when you add up those funding for, let's say, extra 3 months of a site losing money, that's a cash flow. That's what, the investment is. They make a huge difference in performance and return on investment.
And what is the profit margin they look for?
There is no number. There is no strict number on this. I think that's uh, very different from different concepts and different numbers. If you are a food tech company, there's different things. I think if your EBITDA, if your bottom line is less than 10%, you got a problem.
Okay.
Anything 15 to 20% is good. I would say 20% bottom line is where you want to be.
What is something you are good at but you don't like doing?
Running the operation,
What is something you are bad at but you love doing?
design.
Is there something you like to learn more about in your recent times?
I like to learn about recent times would be AI.
Okay. What can we celebrate about you today?
About me, celebrate is I'm grateful. I'm grateful for every day. Honestly, I was thinking about this today. It's just being grateful to be alive and to be healthy and to be happy.
That's good. Has someone made you laugh recently that you started crying? Like tears just rolled out, that much you laughed.
Yes, my daughter, she had the first driving lesson, and the way she was describing made me laugh like that. She almost hit a tree, basically.
Which city did you grow up and would you like to go back?
I grew up in a city called Mostar, which is in Bosnia, and I do go back occasionally, but it's not the same as it used to be. It's very different after the war.
Mhm.
Would I go back to live there? No.
Okay. Lately, have you fallen in love with some new music or a book or a movie or a show?
I'm falling in love with a book called The 5 a.m. Club,
Okay.
which I highly recommend.
That's good. Okay. Best business book you have read this year or last year?
AM Club.
Okay. Worst business advice you have received from anyone?
Never give up.
That is worst business advice.
Yeah.
Okay. Interesting. One tool which you can't live without.
Notion.
Okay. Are you a tea person or a coffee person?
Coffee person, definitely.
Your biggest money myth you had until now.
Sorry,
Myth.
money is happiness.
One hardest part of your life until now is
The hardest part of my life is going through experience of the war and leaving my country and being here at the beginning. I didn't speak English, with no money, and yeah, catapulted from one day to another to new life. And I thought it would be 6 months, and now we are 33 years later. I have a wife, two kids, and I live here. Yeah, so that was hard, but at the same time, I don't wish it to anyone, but I wouldn't change it because it made me who I am now, being resilient and a strong person, I think.
what is one word you live by?
Let's go to work.
Success at 25 and success now. What's the difference?
Success now is understanding what the happiness is, and that's not the money.
Okay.
Now, your question should be what is happiness for you?
So, happiness and peace, which is one you will choose?
Well, to be truly happy is also, you achieve the inner peace. So that very kindly, closely connected. So happiness, definitely.
What is one thing which went wrong but nobody told you about?
Really thinking that starting, growing, and exiting your company is the most important thing in your life. Because when I finally get hold of this, my feeling was, is that it? It was almost kind of strange feeling of disappointment in a way.
Why is that?
And I spoke to many founders who exited, and we all feel the same because you identify yourself with your business,
Yes.
and day in day out, you think if only I can climb to the top of that mountain, I will be happy. There will, everything will be bliss and happiness. But it's not, because you are not your business. You are a person. You have, there is more to it, to every one of us, than just that. And that shock of waking up and going to work every day, growing and being. And then when you sign, the next day you wake up, it feels like a big void, big empty space. You have nowhere to go. Yeah, you have money in the bank, but then it feels really weird. It doesn't feel like a great achievement. It does in a way, but it doesn't at the same time. You're almost like achievement, but disappointment because it's not what you expected.
So, your legacy in one sentence, what is it?
How many people I inspired and how many people I made happy.
And walk me through the moment when you exited, when you signed the contract. Describe me that 1 hour. How you felt? You danced, you celebrated, what did you do?
Well, no, actually, it was, after 6 months of due diligence and multiple kind of times the deal collapsed and we brought it back. And it was Friday, I think, in the February in the city, and Friday is empty, especially late evening on Friday night, raining. You always imagine this day to be Thursday afternoon, sunny day, come out and all your friends waiting and you buy drinks from everybody, you celebrate, you dance. It's nothing like this. I was completely exhausted. I could hardly walk. And it was raining. There was nobody on the street. We said bye to each other, me and my co-founder. I went home. My wife, she's Italian, so she was in Italy with the kids. I have nobody to tell. It was late. Kind of, came back home midnight, I think, or something like this. And I just had a, glass of red wine and I went to sleep. That's it.
There was no celebration.
No, there was, because Friday night there was nobody there. It's late in the evening, raining. My family wasn't here. I'm not going to start calling people around. And, it was just by myself. I went to sleep and that was it. There was no, there was no celebration. There was no this euphoria feeling of, wow, none of this.
Sure. And were you feeling very emotional?
Yes, but you don't really understand at the time. There was, I had a recently chat with the founder who exited last year, and they went through lengthy due diligence, and the next morning he woke up. He had a party with the friends and family. The next morning he woke up, and his body, he couldn't move any part of his body. He was completely. He's not paralyzed, but he just couldn't move. He was this shock, emotional of, and in a way, relief after due diligence. You kind of sign and you get over. He's okay now. Obviously, starting new business, but he couldn't move. He couldn't stand up. It was not what he imagined when you are hoping to exit. So, I don't want to sound like depressing or anything, but it's not. Exit is obviously great, you got financial freedom and so on, but don't think this is the happiness, and you will get just somehow all your problems to go away. That they are not.
You don't know where to go next morning.
Well, yeah, that is the big shock for your assistant, because for 15 years you go every day, and then next day is
Yeah.
like, okay, what now?
Just go on holiday.
Yeah, that's what I did actually. Yeah, eventually.
So now we are wrapping up. Any last thoughts, Edin? Thanks a lot for your time today. It was wonderful to reconnect.
Thank you. Thank you. Last thought. I think, very often I was asked, I do lots of public speaking after the exit and so on. And I was always asked the question, so what makes one to be an entrepreneur? And I think instead of answering that question, I think that entrepreneurs are nothing special, that there are people who are not entrepreneurs, and they're happy in their work. They go to the company, they do really valuable work, and that's fine. Not everybody have to be entrepreneur. We need both, and there is no better or worse. We are all people who try to make living somehow. As much as sexy entrepreneur looks like, it's not all kind of rosy. And if I really don't like looking at these advices and people saying, go leave your job. You have one time in your life, follow your dreams. I just don't think so. It takes more than just having a dream. It takes really desire and the grits, and to be able to endure all the things. If you can live be having no wages for 6 months, then you have a chunk, then you don't have any, then that's fine. But if you can't, then just don't do it.
Sure. So that is very valuable advice, that you should be happy in what you are doing. But if you have drive, if you want to do something, then yes, entrepreneurship is there. But right now, if you have passion projects, AI is there to change things for you. You can work as a side hustle, do
Yeah.
things, see how it works, and then have a swift transition. That is how I'll put it, that you don't need to go all in, leave your job. Just take one step at a time.
And it's also not one way door, because you can go through the door, go on your own. It doesn't work, then you come back.
Yes, yes,
It's not
true.
like a life changing decision. It's like, this kind of flexibility is important, not to take yourself too seriously.
Thanks a lot, Edin.
Thank you.
Really appreciate for taking out this much time and being patient with me. And this podcast is my first, and I'm very happy and very thrilled. Thank you so
Excellent.
much.
Yes, you did an amazing job. Thank you so much for inviting me, and good luck.
Thanks a lot. Take care of yourself. Bye bye.
Thank you. Bye.
Bye.